Have you heard of the married filing separately loophole in order to lower your student loan payment? And you're wondering what the heck is going on? Well, I'm here to tell you about it and share with you that this might not be the best case for you going forward. So, if you are currently on an income driven repayment plan like IBR, Pay As You Earn, ICR, or the future RAP plan, you can use just your income to qualify for your student loan payment if you file your taxes married filing separately. If you file married filing jointly, it uses your joint adjusted gross income. But if you file your taxes married filing separately, it uses just your adjusted gross income. Now, depending on what your income is, that could seriously lower your student loan payment. And that sounds great, doesn't it? Well, there's a catch. The catch is that married filing separately typically has higher taxes than if you file jointly. And the reason for this is that you are not allowed to claim a lot of deductions and tax credits when you file separately. Right now, that includes things like the student loan interest deduction and certain education tax credits. You can't claim them, so your tax burden is higher. The real question is your student loan payment lower than your higher tax burden? If it is, well, then file separately. If it's not, you still might want to file jointly. And here's what that looks like. Let's say you file separately and it lowers your student loan payment by $100 a month. That sounds like a big win. But what if you're paying $2,000 more a year in taxes? Well, now you're $800 in the hole, and that is not a win. And this is going to get worse with the big beautiful bill. And the reason is a lot of the new hot tax credits and tax deductions don't allow you to file separately in order to claim them. This includes things like no taxes on tips, no taxes on overtime, the larger child and dependent care deduction. All those things you file separately, you don't get the credit or you get a lower credit. And so if you are a tipped worker, if you rely on a lot of overtime, you could pay significantly more in taxes by filing your taxes separately than if you would file jointly, and it might not offset the student loan payment. So, what does this mean? It means you have more math to do. You need to run the numbers, filing jointly, filing separately. What does my income-based repayment look like jointly? What does it look like separately? And add it all up and do the math. I'm going to share with you some more numbers here on The College Investor. You can click the link in bio, but I wanted to give you this headline because it is important that you don't just default into married filing separately. You could pay thousands of dollars more in taxes, and it might not be worth it. Of course, like, subscribe, and follow, and we will bring you the latest on higher education and money.